Welcome to another edition of Cattle Chatter. I'm Seasonality. Are we extremely overbought? How tight is the trade? And what all-time cash highs? We're going to dive into that and a lot of factors that are really brewing with the cattle market this week. Brad Coyner joins us. Coyner McClendon Barlick out of Sioux Center, Iowa. So, how overbought are we really at this point?
Well, thanks for having me on, first of all. Enjoy this. Overbought and underwhelmed, if I could use three words to describe the action here of today. Underwhelmed by the futures action, but I think some of the explanation is like you hinted at. We just had a $19.20 rally on June cattle, the lead month. April just went off yesterday, so you lost that that direct connection to cash where, maybe basis has to be a little bit tighter than it has to be now, where don't forget there, you're trading June cattle the way they've got this contract set up, which I disagree with. You know me, I've always kind of got something to complain about, right? But you can deliver June cattle all the way up till like the 10th of July, so really theoretically you're looking at June cattle futures and saying, well, what do we expect cash cattle to be the first part of July? And so, just to give your listeners a little bit of perspective here of, why the big discount. And actually, the discount isn't even that unusual. The last couple of weeks, I talked about getting a wide basis. It looked like I was an idiot. Today, it looks a little bit more like that's exactly what's happening as we widen the basis. So cash market, extremely strong, obviously. 223 from just about everybody yesterday. And even into this morning yet, up until an hour and a half ago, we still had customers that were getting bid and selling cattle for 223. Just a tiny bit of 224, maybe to a regional or two, but for the most part, the north is going to be clicked off at 223 and the south at 218, which is a bunch higher, clearly than what we were here 3 weeks ago.
Well, now we're into May. It's a beef month. So what's pushing this? Is it demand coming from the consumer? Is it lack of cattle in the country? Is it just a combination thereof of knowing packers are short bought?
All of that. I'll start with the demand piece because if you want to take a little bit of a longer view, instead of, we have a tendency to talk about what happened today or yesterday, right? But if you take a little bit of a longer view, I can show you pretty granular data that would tell you that last year we actually only killed 0.5% less of fed cattle slaughter, and with record average weight, you actually had beef production at or above the year before, and yet you had this huge rally. So, I mean, if you look at that, you'd say, well, the supply is about the same or a little more, but so then it must have been clearly extraordinary demand that helped drive the bus. Now, as we transition into 2025, obviously the numbers right now are extremely short. Look at last week's kill, 555,000. So we are finally to the end of the chain here, where we are extremely tight on supply, and especially so in the north. And it's important to recognize that where the supply is the tightest is where we do all the negotiating. We're the ones that establish price. A lot of the places in the south are strictly formula deals, and you can see, well, we're getting $5 or $6 more than them again this week. Now, our quality of our cattle is probably somewhat better as well, but I really think a lot of it boils down to negotiation. And I think you got a packer, not a packer, but multiple packers that need to participate in the cash market more than they would like to, and more than they would have to otherwise. And that is also creating that scramble, of when there's not enough. It's like the farm sale that's got a 40-20 with 500 hours on it, right? I'm not a John Deere guy, but if you run across with one of those things, there's probably going to be 5 dudes that want to buy it and don't care what it costs, almost, So you get into that situation. But I should follow through a little bit with demand. I apologize. Very long answer. It's May 1 now. And now what's the next feature? Well, the biggest beef feature of the year historically is Mother's Day, as they're procuring now for that meat. And then right behind Mother's Day, Memorial Day, cookout season generally, then Father's Day. So you've got a 6-week stretch here where we ought to be enjoying as good or better demand than we've had probably since the Christmas deal, right? So middle meats, and then after that, we'll switch back to the grind, which the demand for hamburgers I've outlined with you before, that high high quality hamburger, the 90s and the 93s, are much higher than a year ago, and they keep selling as much of it as they can possibly produce.
We don't normally talk about pigs during this segment because it is called cattle chatter, but demand for beef, even though the prices are so high at the meat case, pork is not competing and isn't enticing people away to purchase them or the chicken.
At least it hasn't up to this point, Susan. You make a great point. I should show you my slide, but I don't know how to do that. But the demand for beef, particularly, and actually the last while led by the grind, like by hamburger demand, is a nice inclining deal. Demand for pork is sideways. I'm talking about the last 5 or 6 years, sideways to a little bit lower on the pork, and chicken is very flat. It seems like you just don't move the needle on those other two. And I don't know if I have a great reason why. I can speculate as to why. I think one is that you've got a growing upper middle class, whether you like it or not, and that group seems to their tastes have improved to the point where they're going to eat a steak within reason, at least up until this point, without as big a care about the price point. And I think the other segment here, as there are some people that are, dealing with inflation, higher interest rates, a tighter budget. It seems like those people are saying, well, okay, we can eat pork sometimes and chicken once in a while. But they seem to be the ones that are driving the demand for the grind, for the hamburger, for the good hamburger, and probably looking at, like a $4.50 a pound, 90% hamburger is as still being more attractive to them as trying to figure out a way to make pork a little more exciting. I mean, I'm not an anti-pork guy, but I mean, seriously, they've bred all the flavor out of it. I mean, it's sorry, I eat it once in a while too, but that's the thing. You can only kind of seem to be able to do it once in a while, right?
What's your takeaway on fundamentals for the week?
I think the Packer is pretty well in trouble here yet, fundamentally, for a while. It's a family show, right? I got to figure out how I was going to say that. The supply here is still tight. The North is still, I believe, like I've said over and over on here for months, I think we're pulled ahead 30 days. We had great weather, maybe the best feeding weather that I can remember, and I'm an old guy. Okay, so cattle performed well, so we sold them because we loved the price. So we keep pulling cattle ahead, and we've pulled them ahead all the way right up until the rear end of the cow. Okay, I mean, you've got people that with calves, yearlings, whatever, they can't believe that people like me are dumb enough to give what I'm willing to pay for those replacement cattle. They can't wait to sell them. So this is a very interesting dynamic where you had a market that it took us 7 years to go through a liquidation phase, and now we're trying to figure out how to get back into production, and by doing that you've pulled this whole thing forward. So it's from a supply side standpoint, this is still a very, very exciting time. Let's hope that we don't get something that's not cattle, that stops us, right? The black swan thing, and so that's the risk, guys. That's why I keep saying stay friendly and buy puts, but that's where we're at. So I wish I had more help on that.
No, as we get ready to wrap this up, this just coming because of some conversations I've had with cattle producers in the last couple of weeks. Is there a place for hedging from a cattle producer perspective? Maybe this is going to be a cattle 101, but your thoughts?
Well, the marketing of cattle, if anybody thinks this is easy, they've lied to you or they've never done it. That the conundrum of the hedger is in a market like this, of course, is, well, I hedged them and then I made some money, but now my replacement feeder cattle costs are so high, I don't know if I dare to participate again. My advice would be decide whether you are or not. In other words, decide whether you are a hedger or you are not. Don't have to wake up every morning and decide whether you're going to or not. So then devise a plan and then, execute the plan. Find someone that'll keep you accountable to that plan. It helped me a long time ago, and I decided, okay, what percentage of cattle am I going to protect? And sometimes that varies. I find myself with more puts on than I've ever had in my life because I thought the market had upside potential. But I don't think any of us that fed through the 2014, 15, 16 deal where we made all kinds of money in 14 only to give almost all of it back in 15 and 16. I keep bringing that up as a reminder to me and others. Let's make sure we don't do that. So let's not buy cattle 4 months from now that don't even deliver yet without being careful. Let's keep some option stuff underneath us. And and certainly there's a place for hedging. You're in this deal to make some money. Get that hedge off and take advantage of an incredible basis again. And don't worry about whether you made the last dollar or not. Live to fight another day.
All right. Well, I'm looking forward to our conversation next week. I will be in Washington, D.C. You will be in Iowa, but I look forward to our opportunity once again. What's the best way for folks to get a hold of you guys?
Good luck in DC. I'm a little jealous. I get a kick out of going there once in a while. KKVtrading.com. You can find out all about us, or we do still have a phone, 712-722-0023.
Wonderful. Brad Koima joining us for another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.